This company is basically a monopoly. It's definitely tough for anyone to break into the market and take share from a company like that. ASML is probably one of the most important companies you've never heard of. I just bought their stock and I think it's a good bet I've made. Their technology is absolutely cutting edge and years ahead of the competition. So why did I invest in ASML? There are four reasons: monopoly, industry growth, financial strength, and fair value. So let me break this down. The first reason, monopoly. ASML has a near monopoly on EUV lithography technology. Competitors like Nikon and Canon are now here close in terms of innovation. ASML makes extreme ultraviolet lithography machines. These machines are insanely complex, which works in ASML's favor. It's actually their mode, and they're absolutely critical for producing the tiny, intricate chips that run everything from smartphones to advanced AI and autonomous vehicles. As tech evolves, chips are getting smaller, faster, and more powerful. And what's the challenge? Creating these chips requires precision on an atomic level, something traditional lithography simply cannot achieve. And that's where ASML's EUV technology comes in. It enables chip makers like TSMC, Samsung, and Intel to produce the most advanced semiconductors in the world. What I like about this company and their revenue source is that it's not dependent on a single country. So almost a third of their revenue is coming from Taiwan, 26% from China, 25% from South Korea, Samsung, right, as I said before. United States only 11.44%. So it's a lot of room also for this company to expand. The second reason is the industry growth. So the global semiconductor market is expected to grow to $1 trillion by 2030, driven by AI, 5G, and IoT. ASML doesn't just benefit, so they're essential to making this growth happen. Let's go to an interesting statistic about the semiconductors worldwide, where the revenue in the semiconductors market is projected to reach $700 billion in 2025. Revenue is expected to show an annual growth rate of 8.7%, resulting in a market volume of around $1 billion by 2029. In global comparison, most revenue will be generated in China. Now let's just take a look at this wafer fab equipment vendor market share. And if you just take a look at the patterning section, you can see that ASML owns a huge portion of the share, right? The second is Tokyo Electron, and after that Canon and Nikon, which owns very little market share. And this is why I call it as a monopoly, right? Because it owns a very large market share of this patterning technology. And if you want to know more about this patterning technology, I attached a link into the description. For every company, as a long-term investor, you are interested about the predictability, right? And if we go to the earnings and select the annual for both EPS and revenue, you can see that in the past it has grown like crazy, right? And it was predictable because the error was small, right? So as you can see, most of the time ASML beat the estimate. So that's a good sign. And if you just take a look into the future, you can see that the EPS is expected to grow at a high rate. And also the revenue. Also revenue is very predictable. And in the past years, ASML beat the estimates except the 2021, right? And now let's move on to the third reason why I invested into the ASML stock is the financial strength and fundamentals. Their backlog is worth billions, meaning their machines are in high demand for years to come. Of course, the stock took a hit due to 2025 outlook following the Q3 reports and concerns about demand in China. However, this is actually beneficial for long-term investors. And just think about it, if everything were perfect, would the stock price dip or soar? This strategy only works if the challenges are temporary and the company's fundamentals remain solid. And I'm going to the stockanalysis.com, and at the financials and ratios tab, the ROIC has increased from around 11% in 2019, and it should continue to grow because of their monopoly. This tells us that this company is a very high quality company and it has pricing power, it has a great moat. Another one that we can take a look is the return on equity. And it's the same story here, but even better, right? It's 50%. To have 50%, it's amazing. Another point that I want to touch is the usage of the free cash flow, right? Because there are three ways that a company can use their free cash flow. And one of them is buybacks, right? And if we just take a look at the total common shares outstanding, we can see that the total shares decreased over time. Not really that big, but ASML bought their shares over time, which is really good. It's a good sign. Another way is to pay dividends, right? Which is one of my favorites. And for the dividends, if we just open the Seeking Alpha with ASML, right? You can see that the dividend 5-year growth rate is sitting around 23%, which is really huge. And the payout ratio is just 10%. So it has a lot of room to grow in the future, right? Now, after the recent drop, the dividend yield is sitting around 1%, which is not really that big, but for the ASML is good. And if you just take a look at the history, at the dividend yield, you can see that it's not really that bad. Let me zoom in. So it's basically the same level as in 2023 and also 2020, right? When the pandemic, when the COVID hit. So it's pretty good. And I'm just curious about finding the forecast dividends in the future. So let me go again to the dividends tab. And okay, let's take these numbers. 23%. So we start with $1,000, right? And we don't invest another amount annually. 15% dividend tax rate. Initial annual dividend yield, it's around 0.9%. Let's be cautious. So 0.9%. Expected annual dividend amount increase per year, it's around 23%. And share appreciation could be around 7%. And if we invest for 35 years, the number is really huge. So just take a look here. The annual dividend income after 35 years is around $2 million, right? Of course, it's very hard to achieve 23% year over year, right? But in the recent years, ASML did that. But let's change it to maybe 13% and see the simulation. So after 35 years, we will receive around $1,300, which is more even than invested. It's a yield of cost of 113%. And these numbers here are really great. Okay, the dividends are in a very good shape. This company paid them, and just take a look at the history, and they just increased over time. Another one is the debt, right? So they can use the free cash flow to pay debt, and for this we can take a look right here at the debt level and coverage. And as you can see, the debt, it's almost flat. They paid some debt, but they get another one in 2000, actually last quarter. But just let's take a look at the annual, right? So yeah, it's still the same story. The debt is, the free cash flow has increased over time, and also the cash and equivalents, right? So this is a very high quality, right? But even if it's the highest quality company in the world, we are interested in the valuation. right? And I think the price for ASML right now is fair. Some websites show it's even undervalued, but these kind of companies are most of the time overvalued. So a wonderful business at a fair value is a great opportunity. And I can show you. Let's go to the alpha spread. Where is this? Yeah. So ASML, it's currently undervalued by 1%, right? So it's kind of fair value. And if we just go to the Simply Wall Street, they even say that it's 20% below the fair value, which I'm not sure about that. I don't think it's 20% undervalued, but taking into account the quality of this company, the demand, the industry, I think it's a good bet. But that was the discounted cash flow. Now let's take a look at some statistics. And as you can see, the price to sales ratio, which is this one, right? It's really low. It's 9.69%, which is lower than the... Okay, let me switch to the annual. So it's lower than last year, than 2023 actually, even 2022. So it's almost the lowest in the last years, right? In 2017, 2018, it's been lower, but this number indicates that this is a fair value, even slightly undervalued. The price to free cash flow is a bit high. Yeah, it's actually higher. And the price to earnings ratio is 36, so it's low compared to last year's, right? Everything is really good. This company is very high quality company. It has a wide moat. It's in an industry that it's supposed to grow at a high rate with AI, autonomous vehicles, 5G, and the other new technologies. But no investment is without risks. So ASML relies on a small number of clients like TSMC, Intel, and Samsung. And if these companies slow down, ASML could feel the pinch. And let's not forget geopolitical tensions. For example, the export restrictions on China could impact future sales. But despite these risks, ASML's future looks incredibly bright, and they're already working on a high-NA EUV machines, which will push the boundaries of chip making even further. And this ensures their leadership in the industry for at least another decade. So, should you invest in ASML? And this depends on your goals. If you believe in the growth of semiconductors and want exposure to a company at the heart of innovation, ASML is hard to ignore. But remember, this isn't financial advice. Always do your own research. Thanks for watching, and if you found this helpful and you appreciate my work, don't forget to like, subscribe, and hit the bell icon for more stock analysis videos. Especially in the beginning, this will help me to grow on YouTube. And what are your thoughts on ASML? Drop a comment below, and I love to hear your take. See you in the next video. Bye.